Welcome to the Delaware Mortgage Rates Weekly Mortgage Market Update for the week of February 4th, 2013. Hello, I'm John Thomas from Primary Residential Mortgage here to give you your update. Well, last week what we saw was Delaware mortgage rates tried to move lower, but could not as they bounced off the 200-day moving average. Look at the chart on the screen. You can see that the trend has been lower, showing the arrow trending down. And then the two black lines show you that we've been trading in a range. Basically, we broke below the 200-day moving average last week. We've tried to move above that, which would mean mortgage rates could then rally and move lower, but every time we've been turned away, and Friday was the big one. We rallied above, but then after the jobs report, the stock market rallied, and we, again, returned below the 200-day moving average. So the long-term trend is for rates to continue to move higher, but we are recommending you can float on Monday just to see where rates go, to see if, again, we can make another move at the 200-day moving average. If we break below that line of support there on the screen at the bottom, then we would switch very quickly to a locking stance, because that means rates could move higher very quickly. And again, what's the big catalyst for this? The stock market is having the best January in over 2 decades. So this stock market rally is pulling money out of bonds into the stock market, causing home loan rates to rise. So they've risen since the beginning of January. So be cautious on that. The other thing we saw is the jobs report. January 2013 jobs report. What that showed was that there was some mixed news. There was some bad news, there was some good news. The bad news was only 157,000 jobs were added in January 2013. That was below expectations. And the unemployment rate ticked up from 7.8% to 7.9%. When that came out, that did help mortgage bonds rally above the 200-day moving average. But once the rest of the report was digested, the stock market did rally and pull the money back out of bonds. The good news from the report was December and November 2012 numbers were revised, and they were revised higher. So we added 127,000 jobs to those two reports. And then we also, the total number of jobs added for 2012 was also revised upward of another 335,000 jobs. We also saw the release of the GDP last week. Again, that actually came out surprisingly negative 0.1%. That's the first time we've had a negative GDP since 2009. So that was bad news, but again, not enough news to help the mortgage market mount a recovery. So that was probably one of the reasons we saw unemployment tick up to 7.9%, was just the GDP, the gross domestic product. It did not have a very good fourth quarter of 2012. Some very important announcements for mortgages. First of all, FHA finally released what we've been anticipating, the announcement of when they would change the mortgage insurance program. That was released January 31st, 2012 in the mortgagee letter. Couple things going on, but the highlights are the monthly mortgage insurance premium that you pay as part of your mortgage payment will increase. That's based off an annual calculation of 1.25%. For most mortgages, that's going to go up 0.1% to 1.35%. That takes effect April 1st, 2013. When you get an FHA loan, you get what's called an FHA case number assigned to your loan. Once that's done, you're set. You're on the current guidelines. So you need to get your FHA case number assigned before April 1st, 2013. That case number is only good for 6 months, so you got to close within 6 months on that property. Some of the other changes they're going to do is removing the exemption that when it falls off at 78%. So no longer will the mortgage insurance drop off of an FHA loan. It will be for the life of the loan, and that takes effect June 2013. So 2 different dates when they take effect. In the blog, there is a link to a whole article that explains all the changes, because there is some other changes like the 15-year program and stuff like that. So you do want to look at those. Another big announcement comes from the Delaware State Housing Authority, DSHA, announced some changes to the Delaware Home Ownership Loan Program. Basically, they've increased the minimum credit score to 640 across the board, no exceptions, and they've also lowered the maximum debt-to-income ratio you can have to qualify, and that's set at 45%. That takes effect March 7th. Any reservations made March 7th or after on the new guidelines, but you're going to see lenders implementing this change now, because the lenders, if they don't get the loan delivered to you to DSHA before the date of the reservation expiration, they're in trouble. They're going to be on the new guidelines, and they may have approved you on the old ones. So you're going to see lenders probably implementing that almost probably immediately, so they don't get caught with a loan that's not sellable to DSHA. So 640, 45% debt-to-income ratio. Local news. The next free first-time homebuyer seminar is Saturday, February 16th, that's in Newark, Delaware at the Christiana Hilton Hotel. 2 sessions to choose from, 10 a.m. to noon or 1 p.m. to 3 p.m. The next one in Dover is Tuesday, February 19th. That's from 6:30 p.m. to 8:30 p.m. And that's at the Dover Sheraton Hotel. You can register for either one of those seminars by giving us a call in the office, 302-703-0727, or you can register online, www.delawarehomebuyerseminar.com. If you need help, would like to get a free, fast pre-approval, or want to discuss a refinance to take advantage of these low rates before they move up, give us a call in the office, 302-703-0727, or you can apply online, www.prmidelaware.com. Look forward to seeing you next week.